Hey everyone, welcome back. Ready for another deep dive?
Always.
All right, well, today we're taking a close look at Aptus Value Housing Finance India LTD's second quarter results for fiscal year 2025.
Big mouthful.
It is, right. But don't worry, we've got you covered. We've got their press release, investor presentation, auditor's report, and even some questions we've prepared just to chat about this.
Lots to go through.
We do. We're going to break down their performance this quarter, what they're planning for the future, and what it all means if you're interested in investing, particularly in India's housing finance sector. So, ready to jump in?
Absolutely. Let's do it.
All right. So, maybe you could give us a little bit of background on Aptus for those who haven't heard of them.
Sure. So Aptus has been a pretty big player in this space, the affordable housing finance in South India since 2010. They've built up a really solid reputation for growth, being pretty smart about their underwriting and consistently bringing in profits. They've carved out a nice niche for themselves.
Yeah, and that's especially interesting, right? Because India's economy, overall, it's doing pretty well right now.
It is.
We're seeing key states like Andhra Pradesh, Tamil Nadu, Telangana, Karnataka, Maharashtra, Odisha. They're all seeing really good GDP growth, pushing the all-India average to a pretty healthy 7.2%. So how does that bigger economic picture, how does that affect a company like Aptus?
Well, when you have a strong economy generally, it means more people are interested in buying homes. They feel a little more secure about things. They feel more confident about taking on loans. So that's really good news for housing finance companies like Aptus.
Okay, makes sense. So let's look at the actual numbers then, yeah.
Let's get into it.
So their press release is look at this, 27% year-on-year growth in assets under management, which, for anyone who doesn't know, that's basically the total value assets they manage, hitting almost INR 10,000 crore. That's a massive number.
Mm-hmm.
And they've also disbursed 16% more loans just in this first half of fiscal year 2025 compared to last year, totaling INR 1,610 crore. Pretty impressive, Rich.
They are. Those are definitely impressive figures. And their net interest margin, or NIM, you'll see that a lot when you're looking at financials, that sits at a pretty healthy 13.02%.
What does that mean?
Basically, it tells us how efficiently they're managing their lending and borrowing costs. So the higher the NIM, the more they're making on each of those loans. And then on top of that, their return on equity, or ROE, is at a strong 18.30%.
So ROE, break that down for us a little bit. What is that?
Okay, so ROE is basically how much profit they generate for in this case, every rupee that's invested by shareholders. So a high ROE, that's really good. It shows they're using the money wisely, effectively, and making a good return for their investors.
So those are some great numbers there, but there's one thing that caught my eye, and it wasn't quite as positive. Their gross stage 3 assets, and again, for those who aren't familiar with the jargon, this basically refers to loans where the repayment isn't so certain. There's a bit more risk there.
Yeah.
And that ticked up like 6 basis points compared to the last quarter.
Yeah.
Now stands at 1.25% of their total portfolio. Could that be a bit of a warning sign?
Potentially. You're right to point that out. It's definitely something to watch. While 6 basis points, it doesn't seem huge on its own, but it could mean that maybe Aptus is getting a little less strict with their lending. Maybe they're trying to keep up with these big growth targets. And as they expand, we need to be paying attention to that, especially as they move into some new markets as well.
Right. It makes sense. Now, one other thing, they launched that new mobile-first loan origination system, LOS, back in April. Remember that?
They do.
Caused a little dip in loan disbursements at first, but they seem to have bounced back.
Yeah, and I think that shows you how Aptus is really adapting. The world is changing, technology is changing. So that initial hiccup with the LOS, it was a change. Sometimes change can be a bit difficult, but it was a positive change in the long run, right?
Right.
And the fact they recovered quickly, I think it suggests they're pretty good at integrating this new tech and making it work.
Makes sense. So, what else? What makes Aptus different? What makes them stand out? Their investor presentation gives us some clues there. One thing they talk about is financial inclusion. 77% of their customers are in low-income groups, and another 77% are self-employed.
So folks who might not typically get loans easily from those more traditional banks, right?
Right, and it's really interesting how they've made that their focus. Aptus is really tapping into this market that's been kind of overlooked by a lot of the bigger players.
Yeah.
And their success suggests there's a real demand for their services there.
Yeah. And it's not just, who they're lending to, it's also where they're doing business. So their average loan size is actually less than INR 10 lakhs.
and they've got a strong presence in these more rural areas. They
Interesting.
do pretty much everything in-house, too. They control every step of that whole lending process.
Wow, that's a lot of control.
It is, yeah.
That 100% in-house model, that's pretty rare. But it does give them a ton of control over the quality, over the efficiency of the whole operation. They're not relying on anyone else, which can really help keep those costs down and, really make sure that their standards are maintained across the board.
And they are big on tech, too. We've talked about the new mobile-first digital LOS, but, 98% of their agreements, 97% of collections are all done digitally.
Really? That's incredible.
It is. So they're making things so much easier for their customers, and they're streamlining their own operations all at the same time.
It's really smart. Smartphone use in India, it's exploding. It's everywhere you look. So by Aptus focusing on this mobile access, it just opens up this huge, vast potential customer base, and particularly in those rural areas, like you were saying, where they're already strong. So it seems like a really good strategy.
All right, so Aptus seems to be doing well, but where are they going from here?
Right. What's next?
Well, their investor presentation kind of lays out their plans, and they're pretty ambitious.
Yeah.
So they're going to stick with their core home loan product,
Makes sense.
but they also want to grow that small business loan portfolio.
Interesting. So branching out a bit.
They are, yeah. It's like a classic diversification strategy,
That
right?
does.
So they're expanding to small business loans. That means they're spreading out the risk a little bit, tapping into another potential revenue stream.
Smart.
It is, and it should be good for their long-term stability.
Yeah.
They're also looking to push deeper into their existing markets. So South India, where they're already doing really well, but also they're eyeing new territories like Maharashtra and Odisha.
Okay, new places. Interesting.
It is, yeah. What do you
Yeah.
think about that move?
Well, those states, they both have good GDP growth, so the potential is there. But Aptus really needs to make sure they understand the local dynamics in each of those places. I mean, each region is different, right?
Right.
They've got their own cultural and economic, quirks, and those could have an impact on how Aptus does business.
So Maharashtra and Odisha definitely present new challenges.
Definitely.
But maybe with careful planning, their model could really thrive there too.
Possibly. We'll have to see.
We will. Now, they've also said they're focusing on operational efficiency, managing credit costs, and making sure they're optimizing their funding sources.
Okay.
So what do you think about that? What does all that mean?
I mean, these are all really crucial things if you want sustainable growth. They're basically saying, look, we want to keep getting better at what we do, keep those defaults low, and make sure we always have the money we need to fund these big plans that we have.
All right, so it sounds like a pretty solid plan.
It does.
But what does this all mean for potential investors, people like you listening in?
Right.
What are some of the key takeaways? What are the risks? What are the opportunities here that you should be thinking about?
Well, we've got to go back to that small increase in those growth stage 3 assets. Those loans that maybe are a little bit more questionable,
Right.
those are something to watch.
Definitely.
It could just be a little blip, a one-time thing,
Yeah.
but it could also be a sign that, their lending standards are slipping just a little as they try to grow so quickly. So even with a company like Aptus that seems to be doing a lot of things really well, there are always risks, and you have to keep those in mind.
Yeah, for sure. But, despite that, Aptus has a lot going for it, right?
Oh, they do.
They have this great, seasoned management team. Their business model's proven itself, and they've got these ambitious plans, these strategic initiatives we talked about. So, if you are interested in the Indian housing finance sector, they're definitely worth a deeper look.
Yeah, definitely. But, just a word of caution, don't rely on what you hear here. Do your own research. Go deeper. Look into the details. Form your own opinions. We've got all those source materials on our website, so check them out.
Perfect. Okay, so we've laid the groundwork, but we've got lots more to talk about. So let's dive into some of these key aspects even further when we come back. All right, so we're back, and we're still digging into Aptus. We talked about that 27% year-on-year growth in assets under management.
Yeah, almost INR 10,000 crore.
Right, huge number. But for those of us who aren't, financial experts,
Right.
what does that actually mean for Aptus looking ahead?
Well, it definitely shows they're growing. I mean, that's
Yeah.
a strong trajectory, but the real key is that sustainable? Can they keep that up? They need to strike that balance between, growing fast, but also staying profitable.
I mean, it seems like they are managing that pretty well, right? Their return on equity, that
Sure.
18.3%. that shows that they're making money for their shareholders.
Yeah, exactly. I mean, that's a big one. If you're an investor, that's one of those key things you look at. It's
Right.
not just about getting bigger. It's about, are they actually generating profits? Are they using those resources in a way that makes sense?
And their net interest margin, that NAM, at 13.02%, we talked about that.
Yeah.
That also shows they're managing their finances well.
Yeah.
The difference between what they're earning on loans and what they're paying, to borrow money themselves.
Right. A healthy NIM, that's a good sign. You want to see that if you're looking at a financial institution. But we did talk about that little uptick in gross stage 3 assets, those loans that, maybe they're not so sure about the repayment.
Yeah, I'm curious about that too. I mean, even a small increase in defaults, that could have a pretty big impact on their profitability, especially as they move into these new markets.
You're right. It's something to keep an eye on. It's a small increase, but it is an increase, and they're going to need to be very careful. They'll have to assess the risk in those new regions. You can't just assume everything's going to be the same.
So it seems like risk management, that becomes even more important as they get bigger.
Oh, yeah, definitely.
Now let's talk tech for a minute. Aptus is really embracing technology to make things easier for their customers. That new mobile-first LOS, that's a good example.
Yeah, that's a smart move. India, smartphone use is booming. It's just growing so fast. So having that mobile-first approach, I think that's a real game changer.
Especially for reaching those new customers, right?
Right, especially in those rural areas where they're already doing well.
It's not just about access, though. It's about efficiency, too, right?
Definitely.
They've got 98% of their agreements, 97% of collections happening digitally.
Wow.
That's huge. They're streamlining their business in a big way.
And it's not just convenience. Think about the data, right?
Oh, yeah.
All that information, they can use that. They can analyze it, learn about their customers, understand their behavior, their risk, even spot those bigger market trends.
All right, data can be incredibly powerful. They can use that to make their lending process even better, maybe come up with new products that really target their customers' needs, just make smarter decisions overall.
Exactly. It's a gold mine.
It is. But, it's not all about tech.
Yeah.
They're also expanding those product offerings and going into new markets.
Right. They're sticking with the home loans,
Yeah.
but they're adding those small business loans. That's smart, spreading the risk.
It is.
Yeah.
And geographically, they're moving beyond South India. Maharashtra and Odisha, that's a big step.
It is. Those markets, they're interesting, but they're also going to be challenging.
Right.
They have to do their homework. They have to look at the housing market there, the creditworthiness of the borrowers. What are the regulations like? Each state's different.
Right. It's not just, oh, we did well here, let's do the same thing somewhere else.
Nope, not at all. Each place is unique. You have to adapt.
Exactly. And speaking of adapting, they've talked about, really focusing on operational efficiency, managing those credit costs, optimizing their funding sources.
Good stuff. That's what you want to hear.
It is, right.
Yeah.
Sounds like they're thinking about the long term. It's not just growth for growth's sake. It's about sustainability, profitability.
Exactly. And they seem to be managing their funding pretty well, too. They've got different sources, a good mix.
Yeah.
And they've got that cash on hand. So if they want to expand, they've got the resources to do it without putting too much stress on their, their finances.
So we've talked about it a lot. Let's zoom out for a second. What does this mean for someone who's thinking about investing in Aptus? What are those key takeaways from this quarter?
Well, they've got a really good track record. They're growing, they're profitable, they're smart about how they manage their money. They've got a clear vision. They're using technology really well. And you've got to give them credit for that focus on financial inclusion. They're serving a really specific customer base, and they're doing it well.
So a lot of positives there.
Yeah, but you always have to look at the risks, too.
Of course.
We talked about those gross stage 3 assets. Those need to be watched. And the Indian housing finance market, it's getting more competitive all the time.
Right.
New players are coming in. Existing ones are, fighting for their share. Aptus has to keep innovating if they want to stay ahead.
Right. So it's kind of a mixed bag then.
It is. There's a lot of potential, but there are definitely risks to be aware of.
So bottom line, for someone who's thinking, should I invest?
Do your homework.
Yeah.
Don't make any decisions just based on what you hear here. Go deeper. We've got those source materials on the website. Look at those financials, understand what their strategy is, look at the big picture, the whole market, and then, then make an informed decision.
Solid advice as always. And of course, we want to hear what you think too. So jump into the conversation on our social media. Okay, so we've covered their financials, we've talked about their tech strategy, their plans for growth, but let's dig into something they really highlighted in their presentation. It's all about operational efficiency, managing those credit costs, and making sure their funding is solid. Why are those things so important?
Well, because those are really the backbone of any sustainable business. Especially if you're in finance and you're looking to be profitable over the long term. It's like, think of it as building a house. Operational efficiency, that's like, making sure you're not wasting materials, streamlining the building process, doing more with less. And when you do that, you can keep costs down. Credit costs, that's a big one for lenders. And then if you optimize those funding sources, well, you're basically making sure you've got access to the money you need at good rates so you can keep that whole operation running smoothly and make a profit.
Right, so it all kind of feeds into itself.
It does.
One positive action leads to another, and ultimately, it's all about that return on equity that we were talking about before.
Exactly. But it's not just about the numbers, it's about the people too. And Aptus, they've got a really experienced management team. I mean, they've been around, they know what they're doing, and that expertise is so valuable, especially when you're in a growth phase like Aptus is right now. They're expanding, they're taking on new challenges, and having that solid leadership at the top, that makes a big difference.
Yeah, it's easy to get caught up in all the financials and forget about the human side of things. But you're right, the people running the show, they really matter.
They do, and it goes beyond just those top executives. Aptus has really cultivated this strong culture within their company. They emphasize, taking care of the customer, being innovative, doing things the right way, ethically, and that's reflected in how they do business, in their reputation. People see them as reliable, trustworthy.
Okay, so it sounds like they've got a good foundation there.
They do.
But thinking about their plans to expand, moving into Maharashtra and Odisha, how do you think those cultural and economic differences across those states, how's that going to affect them? How are they going to adapt their business model? What about the risk?
That's the big question, right? I mean, you can't just assume that what worked in one place is automatically going to work somewhere else. Every state in India, it has its own culture, its own way of doing things, and those things can have a big impact on how people behave.
Like what? Give us some examples.
Well, think about housing preferences. What kind of homes do people want? What can they afford? What are their income levels like? Even attitudes towards debt can be different from one place to another. Aptus is going to have to take all of that into account.
So a strategy that was super successful in one region, they might have to tweak it, adjust it,
Yeah,
to really make it work in another.
absolutely. And then you've got the economic side of things. I mean, GDP growth, sure, it's good in those states, but what are the main industries there? What about employment levels? Aptus will have to understand that economic landscape too. They might need to adjust their products, how they market things, even how they assess risk, because the borrowers in Maharashtra might be different from the borrowers in Odisha, and both of those will be different from the borrowers that they're used to dealing with in South India.
It's a good point. Expansion, it's not as easy as just saying, hey, we did great here, let's go do the same thing over there.
Right.
It takes a lot of planning, a lot of research.
It does. And you have to be willing to adapt to really understand that new market.
Yeah. So Aptus is going to have to be really smart about how they approach things in Maharashtra and Odisha.
They are. They're going to have to get to know the local markets, build those relationships, really understand the nuances. If they can do that, then they've got a good chance of success.
So I think we've done a pretty thorough job here. We've gone deep on Aptus's performance this quarter. We've explored their plans. We've talked about the challenges they're facing, the opportunities that are out there.
Yeah, it's been great. I hope our listeners are walking away with a better understanding of Aptus and the Indian housing finance sector as a whole.
Yeah, me too. And as always, this is just a starting point, right?
Absolutely.
We've got all those source documents, those reports, presentations. They're all up on our website, so go check those out. Do your own research. Form your own opinions. That's the important thing.
And if you've got thoughts, questions, anything you want to add, come find us on social media. We always love to hear from you.
Thanks for joining us for this deep dive into Aptus Value Housing Finance India Ltd. We'll be back soon with another deep dive on a whole new topic. So until then, keep learning, keep exploring, and keep those brain cells buzzing.